Taiwan is seeing the worst cuts right now of over 1%.
It was a mixed set of numbers from Reliance Industries, and the consumer-facing businesses have put up a very strong showing this time around.
नादवारा में Jio True 5G की सर्विस के साथ 5G powered Wi-Fi सेवा का शुभ आरंभ हो रहा है.
We still have sustainable inflation in many areas.
Up about 1/3% for the sensex and the nifty.
Like our economy is like a glass half full. You know, some people feel optimistic that, listen, the worst is behind us. Some people can feel pessimistic that the interest rate and inflation will come through and the demand is slowing down.
Coking coal prices are very volatile. So from $650, they came down to $200.
At the day's low, we are sitting with cuts of around 28 points at a 100-point downtick from the highs.
Demands that are coming in the RE and the budget meetings ongoing in the ministry right now, those demands, indicate, and some of them have been there since, the H1 of the current financial year as well. So maybe around 3 lakh crore.
We had high prices of APM, non-APM gas, and because of that, we had slight hit on the EBITDA margin.
Rishi Sunak takes over as Prime Minister formally and finally later today.
Mid-cap index, it is in pine petal. That one is up around 170 points.
Okay, that was the day so far. Hello and welcome to NSE Closing Bell. I'm Sonia Shenoy. With me is Nigel D'Souza and Mangalam Malu is joining in from the newsroom as well. It has been one of those days, right? A quiet day, you'd have to say, a day before a holiday and a day after a holiday. So I guess that's the mood in the market right now. Not much has happened, a very narrow trading range. The cash market volumes as well below 50,000 crores, so not too much in terms of action. And Nifty just consolidating around that 17,700 mark. A couple of interesting takeaways over the last few days. One is that in October so far, the technology stocks have rallied. So HCL Tech, Infosys, Tech Mahindra, all up anywhere between 8 to about 11%. Are they making a comeback in a big way? Only time will tell. But this is one pocket that you need to look at. Lot of banks hitting fresh 52-week highs today as well. Bank of Baroda, Canara Bank, Federal Bank, all at fresh highs. And then you have these platform companies which have been under a bit of pressure. Nykaa, case in point, it's down 2.5%. It's now below the issue price and below the IPO price. And the pre-IPO shareholders lock-in will be expiring on the 10th of November, along with many companies. So there'll definitely be supply that could kick in, and these stocks could be under further pressure. So that's a pocket that we're tracking as well. But Nigel, Mangalam, good afternoon. It's one of those days, right, when it's kind of like there's still the festive mood going on, not too much happening.
Well, that's right. We're counting down the clock, 60 minutes to go, 59 minutes or so, and then in fact we'll be done back for a holiday and then come back for expiry. But just to take stock of what's going on in the markets today, the mid-cap index, that's the start of the day. That's holding with a gain of close around 0.7%. So yes, low volumes, but we'll take it as it comes. Mid-cap index doing pretty well. The Nifty, it's pretty clear. We're seeing some bit of resistance at around 17,800. The reason I say that is yesterday we almost went there, and from there we did a bit of a U-turn. Today as well, multiple attempts is what we tried. If you look at the highs of the day, it's at around that 17,800 odd mark for the last couple of days. And the 17,800 call, that's been very, very active. The premium's at around 30 rupees odd. So the bears will want to defend the 17,820, 17,830 odd, and massive open interest build up close to around 40 lakh shares. The 17,700 call as well in the last 90 minutes, well, that as well has started seeing a good amount of open interest addition, and now close to around 40 lakh shares have got added there as well. The bears will be feeling that maybe they can defend those higher levels, but that's going to be a tricky one because we can easily get back to around that 17,750 odd. The good news for the bulls is the 17,700 put that continues to see addition in terms of open interest, giving you a sense that on the downside, the 17,600 level should hold out, and on the upside, the range that we're playing for is around 17,800. If in case we could breach either of these levels between today as well as on Thursday, then we could see a bigger move. But otherwise, I think that's pretty much the range that we're looking at for this series. Mangalam, what else? What are you tracking?
Well, Nigel, you said that there is a fair amount of resistance at today's high in today's trading session. But importantly, we're also finding some support around today's low. So market has recovered from today's low of around 17,650 odd. And the key reason for that perhaps is that the bulls believe that maybe the lows on our index are protected, and when that happens is the mid-cap index which outperforms. And today is the first time in the last many sessions where at an index level we've seen the mid-cap index outperform. In fact, in this month itself, well, the Nifty is up around 3.5 odd percent. The Nifty Bank has been the star, up almost 7 odd percent. The mid-cap index is up just around 1.3%. So up until now, you know, this rally that there was, a lot of people were wondering whether it is for real or not. But only now, perhaps they have some confidence that the lower end of the market is protected. And it happens on the penultimate day of the October series itself. Tomorrow is a holiday, Sonia says, and we're extremely happy about that as well. But, you know, for those who are trading for the expiry, might be taking their bets just today itself as against tomorrow, which is a holiday. So the Nifty, which has gained almost 900 points this series after a series of decline in September, we will be looking at all the 17,700 straddle. You did speak about the 17,700 call as well as the put. A lot of the smart money would actually be writing both the call as well as the put. Together, that would be a premium of around 100, 120 odd rupees. And that's telling you that they are playing for the range that you just spoke about, 17,580 at the lower level to around 17,820 at the higher level as well. But to take Sonia's point forward on all these platform companies, you know, Nykaa is currently at the low point of trade. And alongside that, we have Delivery as well. Delivery in just the last 3 or 4 trading sessions is down almost 33, 34 odd percent. And as we speak as well, it's, you know, currently meandering around the lows of today's trading session.
Okay, by the way, folks, WhatsApp services have been restored, and I must tell you, you know, I only realized the value of WhatsApp when it was down, and I realized how dependent I am on it. Yeah. And finally, it's restored. I mean, how dependent are we on technology, right?
I mean, and I can't recall the last time that it was down for so long. Particularly, I think I'm not sure whether it's during the day. That's why I'm feeling the impact. Actually, at the start of the show, I want to tell the director to make a change, but suddenly I realized I couldn't because it wasn't up till then as well. But yeah, that's clearly hit your.
You know, yeah. I realized when WhatsApp resumed was when I suddenly started getting all the Happy Diwali messages once again. So those pictures with glittering diyas started coming in. I was like, oh yeah, WhatsApp is fine. And
imagine our parents, right? They are on WhatsApp 24/7. They must have felt the hit for sure.
And the forwards.
And the forwards, right. Okay, well, WhatsApp has been restored for everyone, so a lot of relief there. But let's tell you what's lined up on the show in the next 1 hour. IGL is surging in trade despite reporting a weak set of Q2 earnings. The complete fine print and key management commentary coming up on the show in a bit. A whole host of banking stocks are also in focus on the back of their earnings. More details on the numbers. And we'll track the market technicals with Jay Bala of cashthechaos.com. We will also be joined by Devina Mehra, the founder, chairperson and managing director of First Global, to decode the market moves and the road ahead.
Well, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Well, Mitesh, it's been a flattish day for the Nifty Bank, but on the index first, what's your view, the Nifty as well as the Nifty Bank?
Yeah, good afternoon, Nigel. I think, you know, Nifty kind of met the first target, if you're looking at around 17,800, 850 zones, and it's tapered off from there. We have actually, you know, reduced our long exposure on the index, taken profits over there. Willing to buy around 17,650, 660 zones. So I think we have just near the day's low, I think, in case you get it. Having said that, keep a stop below 70,590 or thereabouts. And I think we should, after a few days of consolidation in this 17,650, 17,850 range, I think eventually should head higher. So in that sense, we have a positive view. Persistent is one of the recommendations I have right now. That's a buy with a stop at 3,800 for targets of 3,950. And the other one is McDowell's. That's also, you know, given a good breakout today. Price and volume action is very positive. So buy here with the stop at 854 for targets of 900.
Okay, Mitesh, just stay on. We'll come back to you in a bit. We have an interesting story now. The Nifty PSU Bank Index has been surging on the back of news flow that the government might exceed their target of 25% profit growth in FY23. And if you're wondering why all of these stocks are up and about, Sapna is joining in to tell us more on what she's picking up. Sapna, over to you.
Well, these are indications that have come in now and somewhere around now. So 25% over 66 odd thousand crores of PAT FY22. That will give you a figure of around 82 odd thousand crores. But there is expectation, there is hope within government circles that maybe 1 lakh crore could be feasible in the current financial year itself. Maybe if not 1 lakh crore, at least around close to that number. So it could be around 95,000 crores anywhere in that region. That's what we're given to understand as of now. The banks are also well capitalized as of now. The crowd is pretty healthy. So obviously, even if you look at the trend in the last 2 financial years, there hasn't been any recap, so to speak, any big recap that has been done by the government. So maybe they're completely out of the width finally. But last but not the least, the point here is also this, that interest rates, high interest rates could also have an impact. So maybe that will come and kick in with a lagged effect. You cannot say whether this will be in the last quarter of the current financial year, or this could actually come in somewhere around the new financial year, first quarter maybe. But there could be a lagged impact of high interest rates on bank balance sheets. So that's the counter that we have to watch out for. But as of now, it's a very positive commentary coming in from government circles.
Positive commentary indeed, Sapna, and as a result of which we have seen the big rally that we are in the PSU bank space. The index itself is up around 4.5% at the high point of trade, and a lot of the other stocks are hitting fresh highs. So let's get in a view coming in from Market Master. We do have Nishchal Maheshwari, who's the CEO of Institutional Equities and Advisory at Centrum Broking, joining us now. Nishchal, thank you so much for joining in, and season's greetings to you, your family, as well as your team members. Speaking about banking itself, you've liked the banks, you've called it, being at a sweet spot, but up until now, you preferred only large banks. I wonder whether if the banking index, which is at a sweet spot, would extend its sweetness to all the others as well, say PSU banks and lower rung mid-cap banks as well.
Thanks. Season's greeting to your colleagues and yourself as well as the listeners. Yes, I believe basically the whole banking industry is in a sweet spot. And obviously, given that all the larger banks, including the PSUs, the large PSU banks have also really performed very well after the sterling results from Axis, ICICI, HDFC. I think very good results across the board. Even the smaller banks, Federal Bank result has been outstanding. So I think now the rally is trickling down. We are seeing basically all the smaller mid-cap banks also doing well. So it's like basically when the tide is up, basically all boats rise. So this is what's happening, and that's what we are seeing basically in case of mid-cap PSU banks also. So it's an across-the-board rally basically, and I think the reasons are pretty well known.
But Nishchal, what would you prefer? If case in point, just look at a Canara Bank. In 1 month, the stock is up 30%. The management, Mr. Prabhakar, joined us a couple of days back. He sounded very, very optimistic. And I think on a forward book value, the book value should be around 325, 330 rupees. So even after this 30% rally, still in fact it's trading at around 0.8 times, 0.9 times approximately. Any preference from here? Some of these stocks haven't moved in years and suddenly they're up and about. South Indian Bank, someone said it's a Diwali pick. It's up 20% in 2 days. I mean, would you have a preference out there, or would you still stick to the larger names?
No, I have been recommending some mid-cap banks basically, but it was largely the private sector ones. So my picks remain to be Federal Bank and CUBK. That's the City Union Bank. And we do not cover much of the PSU banks basically, except for the large 2 ones, which is SBI and Bank of Baroda. So yes, I think there would be a few other PSU small caps also, or mid caps also, but given that we do not cover it, we are not recommending. But definitely, I think the rally is trickling down. I think the profitability, the balance sheets, everything seems to be now in a good condition. And given that the interest rates are going up, at least in the initial phase, basically, you're going to see good rally in the banking sector.
Okay, a lot of these stocks are sitting at fresh 52-week highs. By the way, MCX is the one that's surging now. It, in any case, was one of the big movers of the day, but MCX is now up over 9% and huge volumes being traded on that one. So there's plenty of action beneath the surface this afternoon. But IGL is surging despite a weak showing in Q2. It was a miss on all parameters for the company. So Sonal is here to put all of this into perspective for us. Sonal, any reason the stock is up over 7%?
Well, a couple of them. We spoke to the management earlier today and there was positive commentary coming in from them. But first, the numbers where it was a big miss on EBITDA. EBITDA margins came in at 15%, 14.8% versus expectation of 17.7%. EBITDA was also down 15%. EBITDA per unit came in at 7.1 rupees per SCM versus a poll of 8.8 rupees. Volumes, however, for the company at 8.1 SCMD were at a multi-quarter high. We spoke to the management and asked them their outlook for the coming quarters as well, and they said that the pressure on margins that they are seeing is temporary. They expect gas prices to go lower from these levels, and the Kirit Parikh committee, which was set up in order to revise the pricing formula for domestic gas, the outcome or the report should be out in few weeks itself. They are also looking at acquisition of a smaller city gas distribution player. It is at the discussion stage, but something should be finalized by this year end itself, and that is something which will add to the volumes for the company. That is what they say about volumes. They expect volumes to be around 10 SCMD in next 2 years, so that's a big jump from current levels. So positive commentary and expectation of a gas price cut also is something which is propelling the stock higher today. In fact, we spoke to the management. Let's listen into what they had to say.
Even if we earn slightly less, even if our earning per SCM is slightly less, we would like to grow to 10 million cubic meter per day. Presently, this quarter, we are at 8.09 million cubic meter per day. And we hope to reach 10 million cubic meter per day in 2 years from now. And that is our prime target, because we feel that the gas prices are temporarily at such high. The moment the geopolitical issues are resolved, and the government has taken a very significant initiative in the form of Kirit Parikh committee. We hope they will look at the problems that CGD sector is facing, and they will come up with certain solutions that that people are discussing about presently.
Okay, that's on IGL, but Nishchal Maheshwari is back with us. Nishchal, I wanted your thoughts on many of these companies, right, where there could perhaps be a lot of selling post the 10th of November. I mean, we're seeing it with the likes of Nykaa, Delivery, as the pre-IPO lock-in will expire on the 10th of November. What do you do with some of these platform companies? Do you stay away entirely? If you're a holder here, what's the call?
So I think it has to do more with the company specifics, basically. There may be stocks, but I think one thing is common across of them, basically, is after 1 year, a lot of private equity guys who have been there holding on to the stock might look to book profits, like we saw it happen in case of Zomato. So if you are not a holder, basically, wait for that day, basically, and you might find something what happened in Zomato. It went down to as low as 40 rupees, and it was a good, interesting price for you to acquire. So that is one strategy, basically, if you're not holding it. And if you're holding it, I think it's still time to get out of it and wait for that fall to happen, and then maybe reacquiring that if you like the stock.
All right, we take that point. Nishchal, I'd like your views on two stocks in particular. The first one is Reliance reported numbers. Currently, as we speak, the stock is at the low point of trade. You were looking for some more details coming in their, consumer-facing businesses, even as there was weakness in the O2C business. So now that we have the numbers, what is your view on the stock? And the second one is ITC. Stellar results, stellar rally. You've been bullish on the stock since, what, 165, 167. What do you do with the stock now that it's rallied so much? Do you think it's still worth holding?
Definitely. I think ITC has done very well as we had expected, and they are continue to deliver basically on the margins, especially on the FMCG side. We had expected that they will deliver something like 8.5% in FY23. They are on the EBIT level. They are already at 7.3. So I'm very sure basically that's the kind of number basically they will be able to deliver. So they are delivering as per expectations. And still, as the management has continued to guide that they might look for hiving of the hotel division. So there are enough triggers in the stock. And if you look at the stock also, if you look at the valuation, it's still at least around, I think, 25 to 30% cheaper than any of the large FMCG companies. So I think it's a good hold. Rather, actually, you should be buying something like around 330 levels. So we are very comfortable holding the stock at these prices. As far as Reliance is concerned, I think the results are very good, except for there was a bit of disappointment, especially on the oil side, both on the upstream as well as on the downstream. So I think, and especially on the petrochemical side. So I think that is where I think market is a bit disappointed. But going ahead, I continue to believe the consumer-facing business will continue to do well. So we are positive on Reliance, and we continue to recommend to accumulate this stock at these prices.
All right, take that point. You're positive on both ITC as well as Reliance. You are hoping for a demerger or any sort of strategic announcement coming by on ITC, but a strategic announcement did come by on Reliance itself. We'll talk about more in just a bit, but the other stock on our radar is Laurus Labs. A big decline is what we've seen in the last couple of trading sessions. In today's trading session as well, down almost 5%, and this is on the back of a flattish performance, but importantly, the guidance was something that the street did not like at all. We did speak with the management, but Ekta joins in with the fine print of the numbers and what she made of the management commentary to CNBC-TV18.
Thanks for that. Well, yes, definitely a disappointing quarter which came in for Laurus. Remember, it reacted to its numbers quite sharply on Friday's trading session, but the street seems to still be quite unhappy in terms of the guidance cut. Now, in terms of the overall numbers, remember they reported a 30% revenue growth, margins of around 28.5%, which was largely supported by the synthesis division, which was up around 365% on a year-on-year basis. And the street is a bit skeptical about whether or not those numbers can sustain going forward, because a large part of it or some part of it was expected to be supported by a COVID-19 related order that they are executing. But one of the big factors was the formulation division, which was down 70% year on year, because the antiretroviral segment, which is basically the anti-HIV drugs, etc., resulted in pressuring the formulation sales. The company, however, said that they are quite confident in terms of the ARV segment recovering in the second half. The other factor is that the company did cut its guidance. They are not on course to achieve that $1 billion revenue guidance for FY23. They said that they will miss it by around 10%. Anticipated to report around 6,500 crores in terms of revenue, and that should still be a double-digit growth, but the street doesn't seem to be enthused with that. Now, the potential miss is coming from most likely the ARV segment and the underperformance from that particular segment. When we asked them about FY24 guidance, they were extremely tight-lipped, but they were confident in terms of margins being maintained at those 30% levels for the near term. Now, Citi has a sell rating. They've cut the target price to 415 rupees. Motilal is confident. They've maintained their buy call with a target price of 610 rupees on the stock.
Okay, all right, Ekta, thanks a lot for that. You know, Nishal, the management, they were sounding optimistic about the recovery from here on. Only thing, when Ekta counter-questioned them and said, what about that target of $1 billion in the next year? That's FY24. They were still non-committal. So that'll be interesting, you know, whether or not they can get to that mark at least a year later. But what's your view on the stock? Remember, this one went up one way and then it saw a correction from the top.
Sorry, Nigel, we do not cover that stock actually, so difficult for me to comment on that.
Any of the pharma names, Nishal, that you would like, maybe with or without exposure to the API space?
So we like a few of the larger names, again, basically Dr. Reddy's, Sun Pharma, Cipla, and the mid caps we like Aarti Drugs. So I think some of these names is what we like. The underlying theme remains to be the domestic pharma, basically, which is doing pretty well, and where we continue to believe basically the outlook is also very strong. So that is our theme basically that we want to play. And we are trying to avoid basically the turmoil which is happening, still the margin pressure and everything which is happening in the American market. So that's the way we want to actually play out. Unless you are something what Sun is like a specialty seller of drugs basically in the US market. That's what you want to focus upon.
Okay, all right. Thanks so much, Nishal, for stopping by, discussing a whole host of stocks. We'll let you go at that. Have a good evening and have a good holiday tomorrow as well.
Thank you.
Well, you know, before we slip into a short break, just pull up the PSU banking index. And a lot of these smaller banks, they are flying away. Union Bank, it's moved to the high point of the day. Big move out there. PNB Astis was gaining. It continues to trend higher. And you have Canara Bank as well that's moving out there. Well, that space clearly has got a lot of attention. The numbers have been looking good, and the stock prices as well are moving in the same direction as well. PNB up close to around 6.5%. Well, we'll slip into a short break. Where on the other side, we'll track the technicals of the market. Jay Bala of cashthekiosk.com will be joining in. We'll also put the spotlight on a whole host of banking names which are buzzing on the back of their quarterly numbers. You stay with us. Welcome back. Well, the markets are more or less flattish with a bit of a negative bias, holding at around that 17,700 odd mark. Well, as promised, let's discuss the banking names because that's clearly the sector which is in focus. A lot of them came out with their numbers. Ekta joining in to run us through all the quarterly updates. Ekta?
Thanks for that. Well, yes, I'll start with ICICI Bank, which is in focus. That is because it came out with what was really a blockbuster set of numbers. Loan growth was at a 27-quarter high. Global net interest margins at 4.31%, which was also at an all-time high. And the gross NPAs were at the lowest level in 31 quarters. Kotak, net interest margins at over 5%, loan growth at 25% year-on-year. Slippages reduced for the company, for the bank as well. But the street seems to be worried, one, about the NIM sustainability going forward and the fact that the valuations probably capture the optimism in terms of numbers. RBL Bank operating profit, they saw a fifth quarter of a year-on-year decline in terms of operating profits, so the street wasn't too enthused about that. Plus the slippages were higher at over 800 odd crores. IDFC First Bank, slippages remained elevated. Yes Bank, the profit was down over 30% year-on-year. That was because provisions had spiked up quite considerably at over 50% year-on-year. South Indian Bank, that is a small bank, target price of around 13 odd rupees. But ICICI Securities upgraded the stock to buy from hold with a target price of 13 rupees. They said that the improving trajectory in the operating performance has in fact sustained for the third consecutive quarter for South Indian Bank.
Okay, thanks a lot, Ekta, for that. So that's on the banking space, but don't lose sight of what's happening with some of these FMCG companies. There's quite a bit of a sell-off that you're seeing here, not just in HUL, whose numbers were below estimates, but there's Nestle India, which is now down 2.5%. Britannia is down about 2%. Asian Paints is under a bit of pressure, so not looking too good there. Jay Bala of cashthekiosk.com joins in now to give us his view on the index and how things are shaping up. Jay, welcome to the show. Happy Diwali to you. It's been a cracker Diwali for the bulls for sure. We're not too far away from all-time highs. What is the sense you're getting about the market? Do you think the uptrend could continue? And what are the levels to watch?
Thanks for having me on the show, Sonia. Happy Diwali to you and the rest of the team. I think as long as the Nifty can stay above 17,428, the uptrend could continue. But if 17,428 were to break, I think we could see at least a short-term visit to 17K for the market. The key for the market is going to be two factors. One is a local one and one is an international one. The local one is obviously the banks. There is a good strength in ICICI Axis from the private sector names, and also one or two names in the public sector. Although the public sector banks have been doing pretty well, they're coming close to an end point here. They have not turned, but they're coming close to an end point. But if the banking index were to continue, that can propel Nifty beyond the September highs. That's about 18,100. So as long as the index can stay above 17,428 and banking stocks stay strong, I think the short-term trend is higher.
Right, Jay, one of the indices which was at a fresh high before seeing a bit of a correction is the FMCG space. Sonia alluded to a bunch of stocks which were under pressure. Now the street believes that fundamentally, the second half margins may not expand as much as one is penciling in because these companies will have to go ahead and spend more on advertising. But, chartically speaking, these stocks had done extremely well over the last 12 months. Where do you see that index, and do you have any stocks in particular in the FMCG pack which you're tracking?
Yeah, thanks for asking the question, Mangalam. We've been discussing this for the past few weeks. The Nifty FMCG index, if it were to break 42,500, I think that's a turn for the sector. But ITC, as I've been pointing out, it's still not completed its move. In the short term, if ITC were to clock one more high without clocking 339, that will mean the one more high needs to be about 353. If that were to happen, there is a great potential for all the stocks within the sector to turn down. But ITC is the strongest there. It's still not turned down. and it's still not completed the short-term move. But watch out for 42,500 on the sector. If that were to happen, there is an exhaustion in the sector, and there's already momentum exhaustion within the sector. So 42,400 is going to bring in a lot of profit booking. But until that point, you can stay on the edges, continue to remain long. Only below 42,500, it turns negative.
Hi, Jay. You know, the markets will want the Nifty bank to go to 42,500. You know, the Nifty will go dancing away then to around 18,000. What's your view on the Nifty bank? You know, that's clearly the sector which is seeing a lot of attention. There's a consensus buy trade, and fundamentals as well are looking up. Any view on the index? Where is it headed? And also, if you have a view on select banks.
Yeah. See, the resistance for the banking index comes at about 41,850 and 42,300. Surprisingly, there is relative weakness in HDFC Bank. And HDFC Bank, if it were to turn below 1385 or 1365, I don't recall exactly, I think it's 1365. As long as the stock stays below or above that level, it's bullish. But if it were to turn below 1365, it's quite bearish for the whole sector. And SBI is coming to an end of a move, but it's not the end of. We need a one-day reversal to say that will happen. So if these were to happen, then that will bring the banking sector down. Until that point, ICICI has one more high highs to come through, probably going to clock somewhere close to 950 to 960. So it's a bit of cross currents out there. So let the market resolve. Until that point, assume the short-term trend is still up, but from a medium-term perspective, it's coming to an important resistance here.
Okay, so there is some pressure that's seeping into the market now. The Nifty is down about 50 odd points. Nothing alarming, just within that range itself, but giving up on the 17,700 mark. Jay, what we've noticed in the month of October is that there's been a rally in technology stocks. So HCL Tech, Infosys, Tech Mahindra are all up anywhere between 8 to 10%. Do you think the worst is over in terms of the tech fall? And how are the charts looking here?
Now, I've been wanting to turn bullish on the Nifty IT sector for quite some time now. I've been eyeing the 25,000 zone since January, and I've been predicting that correction for this sector here. But the low that the sector registered in September is not a convincing low for me. But I would still believe that there's at least a short-term bullish potential for the sector to rally somewhere close to 31,000. The main strength comes from outside the frontline names in the IT space. I like Persistent, Coforge, and Sasken from that space. But I'll watch what the market does around 31K and decide what to do for the medium term beyond that. But from a short-term perspective, I think it's slightly bullish, but stay bullish on the non-frontline names, like I mentioned before.
All right, as we speak, Jay, a bunch of these stocks are surging away. We have RailTel, which is up at the high point. We have RVNL, which is doing well. We had a lot of market experts actually bet on the railway theme going forward. Ramesh Damani himself spoke about it. And as we speak, we also have a lot of these defense names doing well. Bharat Dynamics is at the high point, and so is Hindustan Aeronautics. Do you have any of these mid-caps on your radar, the ones which have moved from the defense pack and the ones which are likely to move perhaps from the rail pack?
More than the rail pack, I think it's the entire logistics sector that's gaining some traction. If you look at something like Shreyas Shipping and even Shipping Corporation of India, there is some price action suggesting that the entire logistics sector could be getting some movement out here. But I wouldn't be too bullish at current levels because they have moved up quite a bit. So I don't have specific picks within this space, but generally I think if one Shipping Corporation were to cross 126, I think it's going to bring much more upsides to it. So there are some specific trades out there, but not from a medium-term perspective, just for the short-term perspective.
All right, Jay, thanks so much for stopping by and giving us your view. Wishing you, good festive season, and look forward to chatting up with you on next Tuesday. Well, for the time being, quick check on the markets. We have slipped a little bit. We have slipped to the low point of the day, actually. And a couple of these larger names, I think, have moved lower. Not too much in terms of weightage, but HDFC Life has slipped a little. Asian Paints has moved a little bit low. I think ICICI Bank, that's moved into the red. So that one's putting some pressure. And the Nifty Bank is down close to around 100 points odd. That's putting some bit of pressure. Also from the broader market, just want to highlight one stock. There's a large trade that's taken place on Punjab Alkalis. And if I take a look at the total equity that's changed hands out there, that's close to around 4%. So just keep an eye out, close to around 5%, 4 to 5% equity has changed hands. I'm not sure about the parties, but that's clearly a large trade with a big volume spike in the last 2 to around 3 minutes, Sonia. So I just thought we'll highlight that for our viewers.
Okay, and even for the market, right, overall, it was a very flat day, but now it's sort of veering towards the red line. So the Nifty is now down about 56 points, giving up on a lot of its gains that it had about an hour and a half ago. Let's do one thing. Let's take a quick detour from equities and move away from the markets. Here's a word coming in from the former MOS External Affairs, Shashi Tharoor, on the remarkable achievement of Rishi Sunak, who has taken over as the UK Prime Minister today, the first Prime Minister of colour and British Asian Prime Minister. So let's take a look at what Shashi Tharoor had to say.
Extraordinary in terms of the fact that he is obviously a descendant of immigrants of a different ethnicity and race from the majority of English people, British people, and that is wonderful. That's a remarkable achievement. Second, there is the undeniable fact of his religion. He's practicing Hindu, very overt in his Hinduism, which is a surprise in a Britain which has an established church. The Christianity is the official religion of the state as practiced by the Anglican Church. Third is the stunning fact of his age and experience. He was only elected for the first time in 2015. Within 3 years, he was a parliamentary undersecretary. Within 5 years, he was finance minister. Within 7 years, he's prime minister. I mean, you can't imagine such a narrative in India, where he'd be lucky at the end of 7 years to be having moved up from the backbenches to be an MOS or something.
All right, you can also watch the former MOS External Affairs in conversation with Parikshit Luthra on Rishi Sunak's rise and ties with India at 5 p.m. Also on the show, we have Richard Held, UK-India Business Council, and Scott Lucas of the University of Birmingham weigh in on Sunak's economic agenda.
Welcome back. We're back towards the lower end of today's trading session, just within 7 points away from today's low of 17,654. And there are 3 stocks which are pressuring the Nifty lower. On the one hand, we have Reliance, which has moved to the low point of trade. The other, HDFC Limited, has moved to the low point of trade along with HDFC Bank. So the HDFC triplets, actually, Nigel just did allude to HDFC Life, which was struggling. And the third one, which is underperforming in today's trading session right now, is Bajaj Finance. That one too has moved to the low point of trade. So these factors are actually putting a bit of a lid on the gains that we're seeing on the index currently, just around the low point of today's trading session. But remember, it is a day of lower volumes as compared to the regular days. And it's also a day before the holiday and a day after the holiday as well. So a good time to get in our D Street chatter coming along. Nimesh joins us. Nimesh, I have 2 questions for you. One, how difficult was it to get to dealers? Because one, not a lot of them are working today because of the sandwiched working day. And secondly, for most part of the day, WhatsApp was down. So how did you manage to get the insights?
Well, Mangalam, WhatsApp was not a big challenge because most of them can't talk on WhatsApp,
right.
Because of the new regulations. But yeah, a lot of people are on leave, so not everybody is as unlike as what we are. We still have to work on after pre-Diwali and post-Diwali as well. So I think that's the challenge of a media work. But anyway, as you rightly pointed out, that's exactly my point as well. Well, the markets have given up sharply in the last half an hour, 30 minutes of trade, but the volumes are on the lower side. And I'm saying volumes are on the lower side because if we exclude the expiry-led volumes, then the volumes actually are on the lower side. So that means that the participation is on the lower side, and that's why the domestic funds, the actual executors are pretty much on leave or on holiday. So that's why you're not seeing large volumes or large activity from the larger institutions in today's state. So that's clearly playing out. I guess from a trend point of view, we are still in the range between 17,200 and 17,800. Towards the top end of the 17,800, we see some bit of profit booking, and that's playing out in today's trade as well. Having said that, while the Nifty is still in the range, there is a lot of action outside the index as well.
Right.
So the big example is the PSU Bank Index. Within the financials, the PSU Bank Index is up 4%. A lot of stocks are buzzing in trade today. On the other hand, there is a bit of profit booking in the private bank stocks. That was a feedback since morning that there is a bit of selling pressure in the private bank stocks, ex of ICICI Bank. That was the overall feedback. But still, the PSU Bank is where the whole action seems to be. Even in the mid-cap, I just want to put out that point that the mid-cap index is up close to half odd percent, and there is a bit of momentum today. But in terms of flows, it's the other way around. You know, there is a bit of basket selling at a leading FI desk in the mid-cap stocks. The mid-cap basket is what I mean in today's state. So, while the screen may look green for the mid-cap index, there is a bit of selling. So that suggests that at higher levels, there is a bit of profit booking coming in the mid-cap space as well. I guess expiry is going to be a crucial thing on Thursday, but the near-term trend will be largely on the earnings. That's been the trend for the last many days, and that's likely to continue at least for the next few days because of the earnings season. So that's something to watch out for. As things stand, a bit of consolidation happening in today's trade, but I guess two things stand out. The big rally in the PSU bank stocks, and despite the index up 0.5% in mid-cap, there is a bit of profit booking by the larger institutions.
Individual stocks.
Okay.
All right.
All right, Nimesh, what about individual stocks?
I think that's the most important part, right? Everyone's waiting to hear about the individual stocks that you're looking at, Nimesh.
So, okay, Sonia, so in terms of individual names, the first stock on my radar today is NHPC. Again, you know, the entire PSU theme seems to be buzzing, and that's standing out in today's trade, up 5% on very good volumes. The stock is actually on a bit of a technical breakout as well. And surprisingly, there are multiple buyers as well at the few FI desks. So there is institutional buying now in NHPC. Remember, 2 weeks back, CLSA put out a big report, and they have a big coverage on the stock as well. So there is a bit of institutional activity back in NHPC. That's the first one. The second stock is Maruti. Sonia, you track it very closely. There is buying interest back in this particular stock, largely from the larger FIs. And today there was a Goldman upgrade as well. They've upgraded the EPS estimates by few percent, and they've raised the target price as well. So there is a bit of momentum ahead of the earnings in Maruti. So that's the second one. The third stock is South Indian Bank. All the small PSU banks are buzzing in trade, and South Indian Bank is also buzzing in trade, largely on back of very strong volume. So the stock, not only for today, but for the last few days, there is a bit of volume surge as well, and the stock is up 13-14%. For the first time, there is a small buying interest as well with the larger FIs. So it looks like some institutional activity is back in South Indian Bank. So that's the third one. And the last stock is KPIT Technologies. Within the technology names, post earnings, that stock is up 10% or more than 10%. On very strong volumes, and again in KPIT today, there is a bit of buying interest back from larger institutions, though small, but there is a buying interest, and hence you're seeing an outperformance in KPIT for the third day running.
Okay. All right, Nimesh, thanks so much for that. By the way, you know that Punjab Alkalis, we highlighted that there's a 4-5% equity change hands. The deal happened at a discount, and from there we've seen a bit of a bounce on that one. So interesting to see who are the names that turn up, if in case there are fresh parties that are transacting on that front. Sharp downtick, and now in fact a bit of a recovery. And Sonia, given that it's this festive season, since we have a T20 World Cup like Rahul Arora was mentioning, as well as the Football World Cup is coming up, Zomato, that stock has moved to the high point of the day, as we speak. So just keep an eye out on that one. Looks like they could possibly have one of the best quarters, I'm guessing.
Okay, Zomato, there's United Spirits moving up quite a bit, right? The usual suspect over there. But a lot of stocks, I mean, there are also pharma stocks at 52-week highs, so you can pick your poison, alcohol or medicines, right? Let's do one thing. Let us go straight to Mitesh Thakkar now to tell you about what to buy and sell for a reverse trade on Thursday, because tomorrow we're shut. Mitesh, what are you looking at?
Yeah. I have, in fact, a buy on Tech Mahindra. The market has kind of slightly tapered off. But if you look at Tech Mahindra, it's nearly the day's high and very good price and volume action here. So BTST with the stop below 1070 for targets of 1105. And a similar chart pattern is happening on the charts of Tata Chemicals, which is a BTST as well, with the stop below 1173 for targets of 1205.
Okay. All right, Mitesh. Thanks a lot for that. Well, let's hop across to Yash. Earlier when we started off the show, we had some flashes that were up for you on the screen. This is the IRDAI had proposed to remove the order of preference favoring GIC-RE. Yash was with us to help us understand the impact of this. Yash.
Well, that's correct, Nigel. So the insurance regulators come out with a draft paper suggesting certain amendments when it comes to the reinsurance regulations in the country. And as far as this proposal is concerned, it takes away the biggest advantage which GICRE has in the Indian reinsurance market. I'll tell you what the current regulations are which are in place as of now, and then what amendments are suggested which essentially take away that advantage. So as per current regulations, if any insurance company wants to reinsure an asset, it has to seek quotes for that asset from GICRE and 3 foreign reinsurance branches. Once the quotes are received, the quotes which have been received from the foreign reinsurance branches, the lowest one which is there has to be disclosed to GICRE, and GICRE has to be given a chance to match the lowest quote. If GICRE accepts to match that quote, the business goes to GICRE. What regulator has done is that it has taken away exactly that advantage. Now the insurance regulator has proposed a new order of preference, and as per that order, in the first category itself, we'll have Indian reinsurers, that is GICRE, FRBs, which are foreign reinsurance companies, Lloyds India, and IIOs, which are the reinsurance companies operating in the IFSC exchange. What that does is, now the insurance companies have to seek quotes, of course, from foreign reinsurance branches and GICRE, but they don't have to disclose the quote, the lowest quote, to GICRE and give them a chance to match it. They can straight away give the business to the lowest quote, irrespective if it's coming from a foreign reinsurance branches. So of course, it's a negative for GICRE and positive as far as the competitive edge in the business is concerned.
Okay, well, thanks a lot, Yash, for that. But we're just counting down. I think we have about 10 minutes left for what has been a rather lackluster day of trade, one where the Nifty has just given up about 80 odd points and the sensex is down 280 points. So after yesterday's big bang somewhat opening, the market has sort of given back a little bit of its gains. But that could also be because tomorrow is a holiday and people may not want to leave any positions open. Devina Mehra is joining in. She's the founder, chairperson and managing director at First Global. Devina, happy Diwali to you and hope you have a great year ahead. I remember we spoke on the Smart Money show a while back and you were quite bullish on the markets, especially in the context of India doing so well compared to its global peers. Do you think a large part of that outperformance has played out already, or do you reckon that there could be more?
Happy Diwali, Sonia, to you, the team, and to your viewers as well. And very happy new Samvat. Yeah, I mean, I've been talking about India outperforming for a while since at the end of last year. I was expecting that this year India would outperform, which it has done. So as of September end, I was looking at the data. So out of 42 country indices, we are number 8. We were still negative in dollar terms because only 4 or 5 countries, primarily those with a commodity bend, were in the green, but we were way above a whole lot of others. So yes, I think the outperformance will continue, and part of the reason for that is that there was a whole decade, 2010 to 2020, where India both underperformed relative to the rest of the globe. You know, those days we used to be number 24, 25, that kind of range most years, and relative to its own history. So that long-term return of whatever we have in mind, that Indian equity markets return 15, 16%. For that decade, it wasn't even 9%, it was 8 point something, which and those days, if you remember, the fixed deposit rates themselves were 8% plus. So equities gave you no advantage for the extra risk taken. So once that tide turned, that you began to go up both in absolute terms and relative to the rest of the world, I was quite clear that that outperformance would continue. And which is why the risk of a crash also becomes less, because you know the big crash comes when you are way above the trend line. If you are still reasonably below, that risk is limited. So yes, I mean, overall, I think India will continue to outperform. Even now, we think it is one of the best global markets when we look at the countries.
Well, we take that point, and you know, the data also suggests that we're some of the best placed in the world right now, Devina. But you know, the question is that what leads this outperformance? If you're betting on the domestic economy outperforming as against the global weakness right now, how do you play it? Do you play it via the banking system? Do you play it via consumption? Do you play it via autos? I mean, how does one go about it?
See, we look at pretty much all sectors and countries. So in terms of broad trends, I'll tell you right now, our systems are liking small and mid caps a bit more than large caps than has been the, our base case. It's still, we as a house in terms of our portfolios don't go too much into small caps because there is also the risk element, and we are always driven by risk management first. But coming to your question of where are the pockets? See, one thing which you have to realize is the economy and the market are two different things. So it is not that everything is great with the economy, but the parts of the economy which have been doing well have been the upper and upper middle layers. So there is still a lot of issues at the lower end, because you see that offtake of free rations, or you look at number of people looking for Narega jobs. All of those show that there is still reasonable distress in the economy, though. I mean, things have improved in the last 2 quarters, but even so. But there has been a move over the last few years to the more organized sector, which helps the listed space. What also helps the listed space is that a lot of the companies do cater to the more creamy layer. If you look at real estate, they are not going in rural housing. So given that, the sector-wise, if I look at the last 1 year, the sector we've been most overweight on has been capital goods and industrial machinery. And that still continues to be our most overweight sector. So that came out of a very bad 10, 12-year period where it did nothing. I mean, and then there was a demand turnaround, which had elements of the PLI, government capex, China plus one, whole lot of things. Plus, they were, the companies were lean and mean because of that prolonged downturn, and the valuations expanded. So that's been a big winner. It still remains overweight for us. Things where we have added in the last couple of quarters have been auto four-wheelers, auto components, couple of FMCG names. We would be overweight FMCG. Textile and chemicals, we would be overall overweight, but those are not sectoral plays. Those are very specific company plays, because the dynamics in those sectors vary very widely company by company. So those, and you talked about banking. Now, banking is a sector that I rarely, if ever, like, because I think it's a highly risky sector where negative surprises spring out of nowhere. But it is cyclically at a good point. The NPA problems are behind you. Credit growth is good. When interest rates go up, your net interest margins expand, at least in the beginning, because your loans get repriced and deposits don't. So from being very, very low weight, we would be market weight banks now.
Okay, all right.
Not overweight still.
Okay, all right. Devina, first, season's greetings to you, and thanks so much for joining us. Nigel on this side. So you've told us you're fairly constructive on the manufacturing theme as well as industrials, and that seems to be a space that could do well from here. My question to you is, what is the biggest risk for our markets according to you besides valuations? And also give us that one theme, what you're cautious on. Constructive, you've given us a couple of themes already, but what will you be cautious on from here on?
I mean, most of the rest of the things we would, even textiles and chemicals, as I said, it is fairly company specific. FMCG is fairly company specific. Pharma had a good phase when the market was a little bit in turmoil, but barring one or two companies there, we don't like that much. We don't like real estate very much. So those would be the things. So, but we have a fairly diversified portfolio at any point. So it's not never as if we are in only 3 sectors or anything like that. So that is very much there. In terms of the big risks, crude is mostly, known and priced in. Most other commodities have come off their highs, so I don't see a big risk there. As I said, on our own economy front, which is a more medium-term risk, we have not crossed our per capita income of 2019 still. We are still very, very short of jobs which you should be generating. So if I talk of, we all love to talk of the demographic dividend, but the demographic dividend has 3 components, which is working age population, people who are actually working, and productivity. So we have the first one, but we don't have the other 2. So, and this is available to you only for a limited number of years that people coming into the working age population, but youth unemployment is extremely high. So, those are the things which concern me, but those are not like one quarter issues.
All right, got that.
Are more.
Sure, got that. Devina, we're actually heading into the closing for the day. So we thank you for stopping by and speaking with us on this auspicious day. I mean, the start of a brand new year as per the Hindu calendar. So hopefully all your views will come true and this market is going to reach new heights by the time next Diwali comes through. Thanks a lot for joining in and have the best year ahead. Happy Diwali once again to you and your family.
Thank you and happy Diwali.
All right, let's do one thing. Let's slip into a quick break. When we come back, we'll get some market talk going. We'll wind up the day's trading action as well. It's been a little bit of a disappointment for the bulls, nothing alarming, but the Nifty down about 86 points. Stay tuned. Welcome back. Well, we're just counting down to what has been a disappointing day for the bulls. So after a very strong Samvat session yesterday, we've given back some of our gains. The Nifty is down over 85 points and it's down about 160 points from the highs of trade. The mid-caps, though, have outperformed today, up almost about 100 odd points. What led to the decline today? You had largely FMCG names, Nestle, Britannia, HUL were your top three losers, down about 2 to 3 odd percent. Followed by Kotak Mahindra Bank that came in for some profit taking, Bajaj Finserv, UPL, HDFC. And from the heavyweights, Reliance Industries was under pressure as well, down about 1.5% after its numbers failed to enthuse the street because of the weakness in the oil to chemicals business. Asian Paints, Bajaj Auto, IndusInd Bank were a couple of other stocks that ended in the red today. On the upside, though, you had IT stocks. Tech Mahindra did quite well. You had even something like an Infosys that ended in the green. And TCS was not bad, outperforming the market. And auto stocks did very well. Maruti Suzuki, Eicher Motors, M&M, Tata Motors were all your big gainers in trade. So all in all, not a bad day, but not a good day either. Just some profit taking after a strong Samvat session. But let's hop over to Mangalam to find out how the mid-caps perform. Mangalam.
Well, a strong run-up is what we saw over the last few trading sessions, and some profit-taking out there is what we saw on the frontline index. But it was a better performance from the mid-cap index, so to say. The index was up by almost 1/3%, even as the broader market strength was weak. In fact, it favored the declines. Almost 1,800 stocks on the red side as against 1,000 which gained in today's trading session. So let's talk about the few gainers that we had. The biggest gainer in the F&O pack was MCX, and not just PSU banks. A lot of PSUs did well as well. BHEL, gas companies like Mahanagar Gas, IGL. Then we had the Union Bank, PNB, Canara banks of the world. On the way down, we had IDFC and Laurus Labs lower in today's trading session. Laurus Labs, of course, missed the guidance. The management said that they will not meet the guidance. IDFC, First Bank, Indus Towers and RBL Bank were the other bunch of losers. But a clutch of stocks that gained did belong to the railway pack. We had RVNL do well in today's trading session, along with Railtel and a bunch of other defense names like Hindustan Aeronautics and Cochin Shipyard. But, by and large, we have broken a 7-day gaining streak on the Nifty, ended on the low at the lower end. We go into a holiday. Let's see what Thursday brings, which will be the October series expiry. That's about the market action today. With that, we wrap up on this edition of Closing Bell. You don't go anywhere because our Tuesday special, Commodity Champions, comes up next.